Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Tuesday, March 10th, 2026. Stocks tried to rally early, then the bid just leaked away. The vibe wasn't panic, it was guarded, and the theme was simple. Collapsing oil helped calm the tape, but it didn't bring back broad risk-taking. The market traded like it wanted to believe in fast de-escalation headlines, yet positioned like it wasn't sure they'd stick. On the S&P 500 Heatmap, it looked like a tug of war. A few giant boxes in green, just enough to keep the front page calm. But underneath, more tiles were red than green, and it felt defensive. Energy was an obvious red cluster, and some high-beta software names stood out on the downside. Classic setup. The index looks fine, but the internals feel heavy. That Heatmap red makes sense once you follow the money. Energy got hit as crude pulled back hard from that prior spike, so the war premium trade unwound. At the same time, traders still paid up for a few AI and semiconductor leaders, plus steadier defensive areas. The message wasn't buy everything. It was, own the generals, don't chase the troops. Here's the real tension. The market flirted with a bounce on peace talk headlines, and lower oil can absolutely stop a panic. But this didn't trade like a clean risk-on celebration. Participation stayed uneven, and leadership was split even inside big tech. The human override framing fits. Traders weren't selling the rumor anymore. They were bracing for the reality, where valuations and rates still matter, even if oil cools. On the chatter side, the tape was reacting to a war could be over soon narrative making the rounds. The human override also flagged talk that the oil drop came from a scramble-style policy move, strategic releases, output tweaks, that kind of thing. None of that is something you can trade as confirmed fact in real time. But you could see the impact on positioning. Relief bids popped, then traders pulled back into wait-and-see mode. Nvidia was a big reason the tape didn't look worse. It held up on a day where risk was selective, not broad. When Nvidia is green, it acts like a shock absorber for the indices, permission for traders to stay involved, even while a lot of the market is red. The real tell is what happens next. Do the generals keep marching while the rest drifts? Microsoft went the other way, and that matters, because it sharpened the leadership split. Nvidia strong, Microsoft weak. In a healthy, broad risk-on tape, you usually want the mega-cap complex moving together. Days like this hint at concentration, some winners masking weaker participation across growth. Micron delivered one of the cleanest upside moves on the board. The driver in the notes was analyst optimism and positioning into its earnings window. In a market obsessed with AI infrastructure, memory strength gets treated as a read-through on server demand and pricing. The next question is simple. Does Micron follow through and pull semis higher, or was today just pre-event positioning? Palantir was the opposite of that calm megacap story. It sold off hard, and the notes pointed to ongoing insider selling concerns weighing on sentiment. That makes Palantir a useful proxy. When high-beta AI is red while the biggest AI-linked names hold up, it's not a unified AI rally. It's a fragmented trade, and single-name risk is back in focus. ExxonMobil was a clean expression of the day's rotation. It moved lower with the energy complex as crude pulled back sharply from those recent spikes. That matters because energy had been the obvious war and inflation lever. Today, that lever loosened and it changed what the market could breathe through, even if it didn't turn into a full risk-on party. Lockheed Martin stayed relatively quiet, and that's a signal on its own. There wasn't a clear, fresh escalation being priced through this ticker today. In the human override framing, peace talk headlines can actually nuke the war premium trade, making defense less of a clean hideout in moments like this. But geopolitics is still the backdrop, and that can change fast. Looking ahead, the near-term catalyst hasn't changed. Geopolitics and oil headlines. Anything that shifts the de-escalation timeline can move crude fast, and crude is driving the inflation story. On deck into next week, Empire State Manufacturing on Monday, March 16th. Pending home sales on Tuesday, March 17th at 10 a.m. Eastern. Then FOMC Day on Wednesday, March 18th at 2 p.m. Eastern, with the statement, projections, and press conference. So the day ends in a stalemate. Oil relief helped keep the tape from breaking, but it didn't restart a bull run on its own. The real tell is still breadth, and whether leadership can stretch beyond a handful of megacap winners. Heading into the next session, it's follow-through that matters, not the first headline pop. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.